Welcome to Momentum Monday. Today is December 21st, 2024. Howard, how are you feeling after the Fed cut rates, but actually rates yields went higher and most stocks sold off last week?
Well, as you know, it's where this the momentum shows, so it's unpleasant when you ride these trends up and how fast they can, you know, get cut out from underneath you. But trends, momentum is definitely taking a hit. And if you pull up the bonds, you know why, right? It's not that they cut rates; it's that rates st are staying up. So I think this is the chart of the next year, right? Like this is, how much bigger than the stock market, and they can't get a lift, right? Rates are not coming down, and the incoming Trump policies are bullish and, they're inflationary at many levels. And it's hard to say. I mean, it's still good for tech, right? The Silicon Valley is running. This is the closest Silicon Valley has ever been to being a president of the United States with Elon Musk and David Sachs and Mark Andreessen and crypto economy and Raoul Pal is really good macro thinker is like calling it a techno acceleration period, right? If you got people who believe in tech will solve everything, kind of like the opposite of religion. If you have people that believe tech will solve anything, they're not going to be stopped. So who knows where tech will take us? But rates being high benefit the big companies, right? So that was a nasty sell-up, but if you owned Apple and Google and Meta and Nvidia, you didn't feel it, right? Couple percent. Oh, Apple's back at all-time high. So it's like
Yeah.
I didn't even notice that because I own it in Google. So there was like a pause that refreshes, I would call it. But at the same time, the breadth, definitely started to deteriorate. But
Yeah,
again,
we've been talking about it even last week before the sell-off,
yeah.
how
But this could be the pause that refreshes. Think about it. Like
it could be.
if we're in a tech accelerationist period with AI, then it is very good if there's two things that I read. It's like very good if you're very close to AI and very good if you're very far away from AI, right? So the companies that are stuck in the middle, the equal weighted, who are not neither close to AI or far enough away from AI, may relatively continue to lag. And then with interest rates higher, benefit goes to the larger companies. Not that it's great for anybody, but you know, if these companies have so much in cash, Google, and they can earn 5% on their cash, it's like, who's it really hurting high interest rates other than the small caps, right? Oh, the IWM.
Well, many sectors actually, from home builders to
There you go.
energy and
Yeah, energy is a
potentially
mess.
retail. Yeah,
You
energy is a mess.
can't tell retail because of Amazon, but like that's a nasty breakdown in like energy looked like it was about to break out,
Yeah,
until the election, and then boom.
it's just stuck in a range, stuck in a range.
Stuck in a big range, and it looked like we were going to get a breakout. I was long XLE and I got stopped out, right? Like anything on the fringe that's not market cap weighted is just, I don't know, like the QQQs are working. So that's
Well,
where
the
I see
QQQ
what,
definitely showing relative strength. It found support at its 50-day pre-market on Friday, where it bounced. So the big question is,
well,
are we
and
gonna?
now love it or hate it, and I don't love it, is MicroStrategy, which is you now have direct exposure, although overvalued.
Yeah, 0.5% of the QQQ is MicroStrategy, so they have
So
some exposure
now,
to Bitcoin.
and
Yeah,
what would we recommend? I'd recommend 1 to 2% in crypto. So now, if you own the S&P,
the QQQ.
kudos to Storyteller and crypto. Like, so now, every dip in the S&P that gets bought or a QQQ gets bought, you're buying MicroStrategy. So you're going to have 0.5% MicroStrategy, and at
Yeah.
least you're buying it at 300, not 550.
Yeah, and since they're so leveraged in Bitcoin, basically, if you own QQQ, basically you have 1% exposure to Bitcoin.
So I'm just saying, like the index is kind of taking care of you having to own. So kudos to, I mean, what a possible like to conceive idea that the way to own crypto in the Nasdaq 100 directly would be through a synthetic. So I mean, you're overpaying for your Bitcoin, but at the same time, your exposure to it isn't catastrophic. If MicroStrategy went to zero, it wouldn't be catastrophic, right?
Yeah,
And
half a
if
percent.
MicroStrategy
Yeah.
goes to zero, theoretically, Bitcoin is crashing. So, as well. So you kind of like tied at the hip with leverage to Bitcoin in some weird way. So I don't love it because I think it would be better if the QQQ just added Bitcoin in a wallet, like that, but at the same time, that's not how the QQQ works. And so that's interesting. Axon got added, a favorite of mine got added to the QQQ as
Yeah.
well. I mean,
Axon, PLTR, yeah. Yeah.
yeah. So now you have exposure to degenerate, you have exposure to, wow, pound. I mean, okay, but if you go back to Axon, now the NASDAQ has exposure to a massive industry, which is, body cameras and the cloud. So this company now will also get bought on the dips, right?
Yeah. But they
And
have a really tiny impact on the
no, I
overall index.
understand.
Yeah.
I understand, but it's good for the Axon shareholders. Think how
Yeah.
long this company has been around. Go to the monthly. Do you have 30 years?
I don't think they have that data
Oh yeah,
with
yeah, it was in the
those
90s.
numbers.
It was a hot stock under Taser in the
Yeah.
90s.
Under Taser, yeah.
Yeah, so same company. So, you know, it's another boon to indexing, right? And when I talk about direct indexing, like, and I think AI, like for guys like you are very disciplined, Ivan, and like will survive AI as a trader because at heart you have a disciplined approach. I think for the average, just like any industry, if you're not completely wired into AI or completely away from AI, you're going to get your ass kicked, right? And so as far away from you as you can be for AI, so that's creative people, um, that can write, that can create things, and then people that are immersed in AI have the biggest advantage. And I like that. I like what I've read about that. And then you also like what Raul, who really spoke to me when he said, if you really think about the White House, this is tech, focused. We went from like a Congress and Senate that would rip Zuckerberg and whoever, Jack Dorsey, to these congressional hearings with stupid questions to the point where Jared and Andreessen and Elon Musk and David Sachs are running the government in many ways around tech. So they're not going to be slaughtered. And so in a way, the government gets an upgrade technologically. And think about that compared to the rest of the world, right? So let's go to the dollar and what that means. This is why probably the dollar is getting stronger, right? Like, so as screwed up as America is, right? Technology has lifted America because it's deflationary overall. Technology is deflationary overall. So you had Jeff Bezos sitting with Elon Musk, sitting with Donald Trump. You can make fun of it, which I do. You can be mad about it, lots to be mad about. But who would have predicted those three guys sitting at dinner in Mar-a-Lago to any ever, right? The three of them. So in that world, hating on these companies is one thing, and not trusting them is another thing, but not owning them is dangerous, especially on the dips.
So
So,
are
and
you
this is good
saying
for
that,
America, right? Like if America leads technologically and we've got a technological White House and technology is deflationary, then if you look at the Canadian dollar, they're fucked, like with Trudeau and an energy dependent economy. But the market's doing fine. Oh no, it crashed. Okay,
I mean, not a
so
crash, it's just a pullback to the
but
200
look at
day.
the long range. Go look at a monthly. Nothing. It's a fucking neighbor of United States. How can that chart not be insane?
All
Like,
right, let's check on Mexico. About the same.
but I'm saying, like, this goes to prove that, like, and then if you look at Europe,
Which one?
any, like,
Right.
just not Germany maybe, but any other
All right,
European,
let's do France. Yeah, about
yeah,
the same.
they're fucked. And if France didn't have Hermes and LVMH, this index would be in the fucking toilet,
Yeah,
right? Like,
Germany is looking the same actually. Yeah, not very
yeah,
different.
because they don't have tech. And they're fighting with Elon Musk right now. And I know why Elon Musk is fighting with Germany, because he can't win Germany anyways, because Mercedes won Germany. So Elon Musk is just playing ahead games because Tesla's not going to ever have an impact in Germany. So what does he give a shit? He's just lobbing missiles at them, siding with the right wing. Not that I agree with any of his strategy, but as the CEO of Tesla, he could give a fuck about the German market because he's never going to win it. So this is like
So you're saying for the next few
tech is
years,
now macro policy. Tech is now a U.S. macro policy.
for the
And with
next few years, do you prefer to own QQQ
you
rather
have to,
than
because and then you
SPY?
look at Palantir, which is now an American defense software company, right? Like Palantir is going to get all the contracts, right? Like it's overvalued, but you can see what's happening. Like if you're Lockheed Martin, you're going to have to do business with Palantir to get the contract, right? You're going to have to do business. If you're Northrop Grumman, you're going to have to go through to get a contract. You're going to have to work with Palantir, right? Or SpaceX. So you can see how the market is kind of pricing this in. I'm not saying I'm right, but you can it's just my own story overlaid on stock prices. But QQQ just
So you're saying this trend will continue. This is TQQQ,
Mhm.
split adjusted, about 40 cents in 2010.
Yeah, so only COVID slowed it down, and now it's back on trend. So
A little bit,
basically,
yeah.
you're back on trend uh, over. That's a great chart, Evan. So you're back on trend from 2010, right? All COVID did was slow down the trend, misdirection, yada yada yada. But now AI, as Michael Perek and I talk about on Trends with Friends with Phil, now AI has put tech back on trend. E-commerce and stay at home kind of was a misdirection, and e-commerce is going to grow, but like it doesn't have the margins that AI has. So it's really an interesting time. Doesn't mean the interest rates is what scares me, because
Yeah.
you can get unrest if the big keep getting bigger. And then the other thing about the FANG companies, they're going to keep firing people as they deploy AI, whether you're Amazon, and so you're going to have the rich are going to get richer because these companies are going to deploy AI, and they're going to let people go that were making five, six, $700,000. And that's just right back on the balance sheets of the Googles. So if you look at Google, they are truly set to explode. Um, I just think it's truly set to explode because I don't know how much of their overhead they can cut because of brain power. They can cut all that.
Is this your top pick for 2025?
I think it is if tech stays strong. It's my top pick. Um, you know, I think Apple too, right? Because how do you stop a company that has that much distribution? Obviously, Tim Cook doesn't have a seat at the White House yet, so that's a wild card. So I'm going with Google, but again, to me, it's a degenerate economy. Like so, whoever powers a degenerate economy, and I think Google and Apple are at the center of it, benefits the most. And so tell me what you're doing, because tell me what you're doing. That's enough from me.
Okay. I mean, I've been trading mostly on the long side, and but I was actually in cash before that FOMC meeting on Wednesday, and when I saw the stocks breaking down, like I had some short position in Tesla, so I bought some TSLQ. So I traded that pullback in Tesla in the past several days. I even bought puts. I think the stock.
Very
I mean,
nice.
obviously it's a leader, but I think it can test its rising to 20 days. So I've been very tactical. So
Hmm.
while I agree with you that long term we are in a bull market in an uptrend, I think in the short term currently the indices are in a pullback mode, and there is a lot of meat on the short side in select spots in the market, like for example, quantum computing. Like many of those stocks went up, 1,000% or more in the past month or so, and now
No,
some of
kudos
them.
to those people, but they stand no chance in the long term against Google and Facebook and Amazon.
Yeah, we're talking about short-term trading opportunities, not about long-term
No, I mean, it's even
business.
you're getting long-term returns and short-term trading for those people that help. There's
Yeah,
even Asian
amazing.
stocks
Yeah.
too, like
Yeah, this one is up,
Joby.
what is it? At some point it was up 27 times in
Yeah.
like
No, kudos to
two
those
months,
people. Yeah.
less than 2 months.
Yeah.
Um, so there we have a lot of these that I think we can see a substantial, 50, 60, 70% pullback in the short term if you want to trade those. But most of the momentum leaders in the past few weeks have gradually started to lose momentum and to pull back. And we talk about MSTR, but also Coinbase, even though now we have a pullback to the rising 50-day where some buyers might show up.
It's
But
amazing it's a pullback, but it's 30%. Like these are like really big
yeah,
pullbacks.
in general, the S&P is now below the volume weighted average price since the election. So the average buyer since the election is now underwater. So this is why it's really important to see what will happen in the next week or two. Are we going to see another quick typical V-shaped recovery as
Hmm.
usual, or are we going to turn into an environment that is more sell the rip than buy the dip?
Hmm.
Um, I don't know. I'm open to both. Obviously, it interest rates are going to play a role,
Yeah.
and if they continue to perk up, we'll have market breadth continue to deteriorate, and then the mega cap continue to outperform. So it just depends on the time frame you're on. You know,
Yeah.
typically when volatility spikes, and last week we definitely saw a spike in volatility. Volatility spikes at turning points. So I don't know if last week was a turning point or it was just another short-term shakeout. I think I would give them 50-50 on both. And when volatility spikes, I tend to become a lot more short-term and just mostly trade intraday, not take overnight risk unless it's with options where my risk is precisely controlled. I know that every time I buy call options or put options, my risk is the entire premium. So I will never have a big allocation, more than 1%
Hmm.
of my capital. But when it comes to, swing trading, I would like to see lower volatility. I would like to see tighter ranges so I can afford, to have bigger exposure to the market
Yeah. It
overnight.
doesn't
And
help you with the volatility as a swing trader because you can't
yeah,
get your
but it
position
helps
size.
you as an intraday trader because you have those huge ranges intraday. If this is your thing, if you want to just spend time in front of a computer during the day,
Yeah. But
playing
good for
that
you.
game.
Like I think this is a time to, especially end of year. So it's generally a good time of the year in terms of people are away from their desks. So people run the market, paint the tape, try and get their
There's
small
something for
positions out.
everyone. Like last week, there were way more opportunities on the short side than on the long, but next week might be different. You just have to adjust. The market is changing uh, frequently, so we have to change with the market, with whatever's working.
Yeah. Good for you. And then even the biotech's week and stuff is like, well, you look at Intuitive Surgical.
I mean, I don't know if Intuitive Surgical is even a biotech. I mean, they're like,
But I'm saying like like this goes with tech meets medicine is where it's at. Like you have to, this is robots meets medicine, and they could have like this is been
yeah,
bullish.
there's another
Again, I own
another
this in
robotic play
QQQ. Oh,
that's
what's
interesting.
this?
Surf Robotics. So they have delivery robots. Obviously losing money, but it's a hot space. I mean, robots are a hot space
Yeah.
probably for the next few years. So this one has been, building here a new higher base, and now it's
Mhm.
been perking up lately. And also all the drone plays are also are likely to become. I mean, they are popular, but maybe remain popular. Here's another one, UMAC. Let's see if they can build another base here in the next couple months and
That's a
tighten up.
beautiful unusual machine. Oh, that's the one that has Trump on the board, I think.
Yeah, but this one has been going up way before he joined. But yeah, in general,
Yeah. Why do you think it was going up? I mean, he told all his friends that he was going to join the board. Like again, like be very careful of
probably. Yeah.
No, I'm saying it could be, I could be wrong,
I
but
mean,
like,
you have a good point. So in your mind,
in a
what is the
world where grifting is going to be at all-time highs, indexing like I look at the small caps. Let's pull it back up here last before we go. I look at this and I'm like, it's telling a story that makes sense. The dollar is super strong, not great for small caps. Interest rates are high, false breakout on monthly. It
oh, this is
just,
weekly, this is monthly. Okay.
yeah. So I worry. Again, if you're rich, this has never been a better time to be alive. It's a trap, right? Like this, you get 4% on your money. You already bought your home. You don't need more space. You're old. You're downsizing. Like everything is working for rich people. Okay. And again, that is the wild card here. How much will people put up with? But in the White House is a tech accelerationist, and if maybe you can keep people happy with DoorDash and gaming and degeneracy, and maybe the world just passes down the money to these kids. But I think small caps just, I'd like to see it would be fun.
They're
It'd be more fun if
underperforming.
small caps were doing better.
Yeah. I
It
mean,
would be
right now they're underperforming, and but still, if you're a long-term investor with as long as they hold above 200, I don't think there is a reason to worry. If you're
right.
like a short-term speculator, swing trader, yes, you have to be looking at the shorter time frame on a daily and make your decision based on a daily chart. But if you're really a long-term investor, I mean, it's still in a pretty clear uptrend,
Yeah, yeah,
and
yeah.
it can drop 10% from now, from here, and it's still in an uptrend. So I wouldn't
Yeah.
worry, until it holds above 200,
Yeah.
um,
But
even in
it's still
small
a
cap.
very thin market overall. So, and I get why. I like it makes sense to me, and it's going to be. I think the unfairness continues. Now, the good news is, there's just so much to choose from still.
Yeah, definitely. I was going to ask you, like, to end, uh, like, in your mind, what's the main difference between a meme stock and a meme coin, and what would you prefer to speculate on in 2025?
It's a good question. So, a meme stock, we have what DJT, we've got Tesla, we've got AMC. Well, now AMC is now lost, right? But GameStop, AMC is not a meme stock anymore, but GameStop is. And here's the interesting thing about GameStop. I traded, I got stopped out, but they brought Nat Turner, who's just an incredible entrepreneur in sports and collectibles and everything. He's incredible. He was an LP in my fund, full disclosure, but very young. He doesn't do stuff for shits and giggles. And so, if you couldn't kill GameStop and there's smart people coming on board, they're up to something. Right? It's not just a short squeeze anymore with what's his name has kind of blown his reputation, right? Like, but if what didn't kill it, unlike AMC, like pull up a monthly of AMC. Okay, that there's a big difference now in meme stocks, right? Like Palantir, GameStop, Tesla. And by Palantir and Tesla, I don't mean they're true memes, but they trade at a valuation that's tied to something else besides fundamentals, right? Relative to everything else. It's just bananas in a market that has 6% interest rate. So you have meme stocks, and you can get rug pulled by the performance of the company for sure. Okay. Meme coins are literally narrative, no fundamentals. So for and so everybody's Goldman Sachs, everybody's the market maker. And if you don't know what you're doing, you are the sucker in the room, kind of like a poker game. Okay. There's no CME, there's no CBOE, there's no NASDAQ, there's no SEC to protect you. It's just you trading against everybody else. If I was going to go into meme stocks, I would use you over, I wouldn't trade myself. Right? He who has inside information and the idea of insider information is now completely changed because it's how you code these things and how you market these things versus how much revenue you do or what your margins are, right? And and so they're not going to go away. I think meme stocks were a prelude to meme coins, and meme coins will persist for the rest of history. That doesn't mean 99% of meme coins won't go to zero, But let's be honest, 70% of all stocks go to zero over time. So at some point, could 70% of meme coins exist? Like Doji? Yes, because people will get smarter and smarter people will move to meme coins and smarter people will move to storytelling. So again, and AI will drive stock prices or meme prices. So super bullish on the idea of meme coins because it's a pure, you're separating fundamentals from narrative. So the Palantir and GameStop and Tesla are both fundamental and narrative. Meme coins are starting 100% narrative and will slowly move towards fundamentals. And people that don't understand that, again, I'm not like, this is not a bold prediction. Um, you don't have to be into meme coins today. Uh, but we are over the hump with Solana and Sui and all these things. They're and exchanges like Spot.dog and pumped up on what sounds silly is the new toy. Mark,
So
these
you,
meme coins are the
yeah,
new toy.
you're saying that Soros's idea about reflexivity might play a role in meme coins at some point. You're saying that the success of some of them,
Will
the
lead to fundamentals. Like you'll want to create a fundamental story around
yeah,
it.
my late, yeah, interesting.
Yeah.
All
Well,
right, Howard.
I try and be
Happy
interesting.
holidays
All right, buddy.
and see you
It's a good
next week.
question. I think, what do you think about? Am I crazy or is that interest or is that something that you can believe?
I agree with you. Currently, the main difference is liquidity. Obviously, you don't have as much liquidity in many of the meme coins. Way more than 90% are going to zero. I would say
I said
99.9999,
99%. Yeah.
like even more than that. Like very few will
Okay.
probably survive the test of time, but
But you can't, but it didn't exist. So 99%, of course, because of the way
but
markets
it's a
work.
wild west, and the threats and both the risks and the opportunities are insane, are bigger than in
Correct.
any other industry.
Correct. Because you're hiding under the radar. The second thing, Ivan, is just like you said, it is the Wild West, but now the Wild West has been discovered and is being built on rails, just like the internet. And this is the only chance for people stuck in the middle, right? That so again, if you're going to be in the stock market, Ivan, in a world of AI, I can't tell you how much more I'm for indexing. Again, otherwise I have to do it full time and go up against people like you. So it makes no sense for someone who's busy to be stuck in a world of AI trading stocks when indexes do better, right? And I'm up against you who spends all day sticking to a strategy. So I'm done. I'm a dinosaur. But the good news is profits drive company stock price over the long term. So until that rule changes, indexing, buying dips will work. So if you really want to invest in the stock market, you should be spending all your time on the fringes, understanding what's happening in a completely opposite world, which is a narrative-driven world. The good news is there'll be indexes for this in 10 years, 15 years.
All right, Howard, thank you again, and see you next week.